The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and welcome to another week in trading. If you have any questions, feel free to give me a call. You can reach me right here at 877-927-6648. Again, that's 877-927-6648. And right now, go ahead and do a quick market wrap, see where everything is at. Most markets aren't moving a whole lot right now, but we got the S&P up 3 points. We have the NASDAQ up 11. We got the Dow up 33, and the Russell is just up half a point. Looking on over at gold, it's down about $1 on the day right now. Copper moving a little bit. It's down almost a percent. It's down 0.68% right now. We got silver. It's down about 0.5%. And looking over at corn, the ags, when all else isn't moving, the ags seem to always like to move. And we got corn right now down 23 points, and we got soybeans down 44 points. That's a 3% move on the day. Absolutely huge. Looking over at oil. Oil is down just a mere 24 ticks from settlement on Friday. And looking over at natural gas, it is up almost 2%. So natural gas and looks like corn and soybeans being our big movers on the day. And then hopping on over and checking out our currency pairs, we got the euro dollar up 3 pips, the pound dollar down 23, Aussie dollar up 46, US yen down 2, US franc down 2, and US Canadian down 20 pips on the day right now. And as always, we like to go through and look at the fundamentals and see what's going on. It's a little bit of a different day right now. We have, of course, the bank holiday right here in the United States, Veterans Day being yesterday, and a thank you to all veterans out there. And make sure if you haven't told those that you know, your loved ones, your coworkers, and family, friends, etc., that you know have served in our military, make sure to let them know that you appreciate their service. Even being today, even though it's the day after Veterans Day, you know what? The banks are celebrating it today. They're closed. So go ahead and make sure you call them up, send them a text message or something. Just let them know that you do appreciate their service. It's always good to hear that. And even sent my grandfather text, and it's pretty funny. He loves to text, so he gets a kick out of it when I text him. So I text him. He's like, "Oh, you bet," And one of my best friends, best man at my wedding, he served over in Iraq, and also let him know that I appreciated it, and a couple other guys that I know, and they always just enjoy that. Just hearing that. I mean, it's been 30 years since he served, but to hear that is just a good thing. It brightens their day, and lets them know that we do appreciate him. Also, Remembrance Day in Canada is taking place right now. So that is going to throw the markets off a little bit, having a couple bank holidays happening today. All the markets are open, but the banks, again, are closed down in Canada and the United States. The Eurogroup meetings are going on today, and it's last night what happened was the little Greek parliament approved the austerity measures in order to try to get the refinancing from Europe. And so right now that's the big focus in the Eurogroup meetings, with Greece at the top of the list about will they and how will they, if they will approve the refinancing. That can throw things off a little bit more than what you'd expect to come out. Really, I mean, the currencies were heading, the dollar was gaining against all of the pairs there, but it started to get a little strength based on just a little bit of news that has leaked out of that. And basically the one big report I saw that came out recently was that the Eurogroup chief, Juncker, says that the Troika report on Greece was positive. So the chance of a Greek bailout has increased, and or at least payments towards their bailout has increased, as they've been, not only has the Parliament approved the austerity measures, but the Troika is giving sort of a thumbs up to Greece, and now they have to have the Euro members vote on giving them any additional funds, or how are they going to work that deal? What are they going to do to make that happen? So just be careful over on those currencies. I know some of the trades I'm looking at today are a little bit, in the red. Some of them are positive, but it's a little, it's not quite what I expected to come out that fast. And nevertheless, I always trade on Nadex. That limits my risk, and so I can make it back today or tomorrow pretty easily because, again, risk is always capped when you trade over at Nadex. And looks like we have a couple things going on. We have that. We had the Eurogroup meetings with the M2 money supply come out of China, and it went down, which that's the measurement of their import and export, so basically the currency circulation. And that was a negative impact for China. That sort of dragged the markets down a little bit and gave the dollar a little bit of strength. And so I got a caller now. We got William from Vegas in Nevada there, and I got a question about gold and the S&P 500. What you got, William?
Darrell, this is Bill Foster in Las Vegas. My question is specifically aimed at the S&P and gold. I just appeared on Tiger TV and was calling for the S&P to drop significantly over the coming weeks and months and gold to rise significantly. Where do you see these two pairs going?
Over a long term? What time frame are you talking about?
Well, let's say short term, mid term, and long term. You pick it.
Right now, I am bearish on the S&P long term. Just because it broke a support level that I use. And on the SPX, I had 1397 as support level. It broke that last week. And so that gave me sort of a long-term bearish view. Medium term, I think it's going to be incredibly choppy as what's going to affect this more than anything, I'm sure you're well aware of, is it's not simply going to be chart-based. It's not going to simply be technicals. It's going to be fundamentals. With Congress and the president having to work out a deal on this fiscal cliff crisis, the tax increases, the Medicare subsidies going to doctors right now, and the debt ceiling. So all four of those things are on the table and are going to be a huge, huge issue. And so if it's not saying that they're actually progressing towards a solution to that, so because if those taxes go up, then as a fund manager, if you're hedge fund, mutual fund, whatever, if you know your taxes are going up by 5, 10, whatever percent guaranteed next year, you're going to have to sell off before the year's over, or else you're basically locking in a guaranteed 5 to 10% loss in taxes on your profits. So if they don't get the tax solution in place in time, or if they, say, hey, it goes to the high income earners, whatever, then that could cause a market sell off even short term. What we do have, or medium term, so being over the next, let's say, couple months. Now, short term, what we have is we have the holiday rally about to kick in, and traditionally, the week before, not traditionally, seasonally, the week before Thanksgiving, we usually see, multiple, like 15 out of the last 18, I think, like on the Dow, S&P, et cetera, have completed, positive, higher. So as far as this week, it probably will be a higher week by the end of the week. Also, during the week of Thanksgiving, we see the same thing. Wednesday and Friday are usually positive days. And then we usually get a little bit of a rally going into Christmas and from Christmas to, New Year's. So for the next, 5 to 6 weeks, seasonally, it should be positive. The only thing that could get in the way of that would be, all these fiscal cliff issues and tax issues that we got going on. So, basically just trade with, I trade very short. I trade 1 day to 1 week at most, personally. I trade on Nadex, so I always have defined risk. So that way, if it does, chop completely against me, then I'm not that worried about it. On gold, that's obviously going to have a big impact on the dollar's value. So I don't see them printing more dollars, but if it looks bad for the economy, that will cause deflation. Okay? And so even though people will, in essence, want to buy gold if they think, the U.S. is going down type thing, if it's deflationary, meaning they see less spending happening because the government's spending less money, then that'll increase the value of the dollar because people will fly to bonds and everything else. When the dollar's value increases, that will drive down gold's price as well. And so if the market is falling, gold will most likely go with it in that direction. If we hear, and I did read some reports that, the two sides, Boehner and Obama and, all the other guys, the Senate and all that have come together, and they're starting to talk about, instead of increasing taxes on the rich, as they call them, they're looking at closing loopholes. So that way they can extend the Bush-era tax cuts, but close a bunch of loopholes on high-income earners. That would probably be seen as a positive for the markets because it's just a solution. They just get a solution in place, and a solution that doesn't raise taxes. And that solution also might allow them to sort of most likely kick the can down the road on the fiscal cliff, which is what I definitely see happening. I can't see them solving, $1 trillion in cuts in the next, 6 weeks. But not exactly the straightest answer. But as far as like short term, I'm bullish on the markets and on gold, but I'm watching as fiscal cliff news comes out because any negative news out of that is going to hurt it. Also, the European thing I was just talking about right now. the Troika gave a thumbs up to Greece. Greece's parliament passed the bailout package. And now if the Eurozone members will agree to those additional payments to help Greece continue to finance and extend out their financing, then that'll lift the markets by itself, because that'll devalue the dollar by increasing the value of the euro, and people will put their money into equities. And if that does devalue the dollar, then not only the market will devalue the dollar, then not only will the market rise, but gold will rise as well. And I imagine that exactly is what we're going to see play out. So from now to the end of the year, I would be positive, bullish on the market, except for fiscal cliff. You just got to watch that and be ready and be nimble to, exit a position if something does happen. Does that help at all?
Thank you, Larry. Darrell, that is excellent. As I hear you said, short term on the S&P, probably the holiday rally, and then midterm, we're probably looking at real choppy stuff, and then long term down. And gold, that's a mixed thing. Probably kick the can down the road, like you say. Depends what happens in Washington, and the European issue in Greece, and then the euro. All complicated issues, but
long term, I think what's going to happen is we're going to have lower GDP. Nothing that they're going to pass is going to make things better. So, all the money the Fed's pumping in doesn't go into money supply, which is you need money, basically money changing hands, people buying and selling stuff to make GDP grow. That's the only way GDP grows, and unemployment won't get better unless GDP grows. So,
the government can cheat on that GDP. I mean, yes, it's buying and selling stuff, but the government can buy and sell stuff too. And the more they step in there and try to prevent this recession that wants to happen and clean out the system, to me, the worse it is, because
you're right.
Correct. And
and the government step in so far, the Fed stepping in, they're not helping GDP. They haven't helped it at all, and except for the first bailout, but all QE2 and QE3, none of that has went into money supply. It's made the market rally, but it hasn't made the money supply increase. So basically, money's not changing hands; it's just going into the market. So, but basically, what they're doing is they're making it where it's expensive to hold bonds or hold money market funds, everything else, and by doing that, it forces people to buy stocks because they're basically going to get a negative return on the interest rate. I mean, with inflation counted in, bonds and money markets, and cash will lose money just because of just pure inflation. So since that money isn't going into money supply, GDP won't be able to go up. Now they could try to stimulate somehow, but I think we can all agree we see another 2008 crash coming, but we definitely don't see another 2009 bailout coming with the current Congress that we have. So, definitely long term, I'm definitely bearish at least through the end of next year.
Wow, really good analysis. Thank you very much, Darrell.
Hey, you bet. Thanks for calling in.
Yeah, bye.
Bye.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And we got just some crazy stuff going on coming up. We're going to see how everything runs out. One of the things, like I said, I do mention on the show is seasonals. And this week is usually a bullish week. So about 70% of the time, it is a bullish week the week before Thanksgiving. And so you could trade that strategy on, say, weekly binaries on Nadex. There's a lot of different ways to trade it. Also, of course, you got your futures, you got your ETFs and options. But my favorite way is using Nadex because everything's defined risk. I don't have to worry about if the market whipsaws against me, midweek, things like that. And then going into next week, we'll have Wednesday before Thanksgiving, Friday after is also usually both of those are usually bullish days from the close to the close of the following day. And let's go ahead and see what else we got on the roster for the week. We just went over the bank holidays and everything else for today. Yesterday, nothing major really came out Saturday night. Looking on over for tomorrow. Tomorrow we're going to have a few reports come out. We're going to have the CPI report come out for Britain. And that is basically the consumer price, index. It's basically what they're doing is they're measuring inflation and looking at everything. They're expecting the number to come in at 2.3, and they're looking for obviously increased prices, things like that, to be a positive sign for the pound. So if the number comes in higher than 2.3, then that should cause the pound dollar to rally. Again, that's 4:30 a.m. Eastern time tonight, and you can get that over on their website at ons.gov.uk. Under Browse by Theme and then Consumer Price Indexes. And so that's a trade if you're a late night trader, part-time trader, things like that, then that's a great trade setup for you. And you could look at doing a possible straddle on binaries or bull spreads over on Nadex. Now, looking a little bit further what we got going on this week, we got the German Zoo Economic Sentiment Report, and that'll be coming out. That's a pretty big one there. That'll affect the euro a lot. And that'll come out at 5 a.m., so that's going to be a euro-dollar trade. And what they do is they go and they survey institutional investors. And they survey about 275 of them, and they ask them to rate basically their 6-month economic outlook for the economy. And they're expecting it to be negative 9.9, which would actually be a much better number than has come in recently. So, because it's been negative 11, negative 18, negative 25, negative 19, negative 16 for like the last 6 months. It's been worse than that. So, if it comes in more positive than that, then that could definitely give a boost to the euro. If it does not come in at that expectation, it comes in at a lower negative number, like say negative 10, 11, 12, whatever, then that, of course, is going to hurt the euro dollar. And again, that's a 5 a.m. trade coming up. And let's see here. Where can you get the access to the zoo report there? zew.de. And just click on the latest releases, and you'll be able to see the newest one when it pops up there at 5 a.m. And so there's your euro dollar trade coming up for tomorrow morning. Let's check out what else we got going on. The Bank of England inflation letter. Now, that is not going to be a timed event. So, but it will affect the pound dollar. Seem to be aware of this report that's coming out. And that'll come out at bankofengland.co.uk. And over under publications, news releases, you'll be able to see it when it does come up. But just be aware that could affect the pound dollar at any given moment tomorrow. So, unfortunately, they don't necessarily say exactly what time they're going to release that number. And it's not really so much a number, it's more of a report. So, since it's not a number, then there's not an expectation number. It's going to have an impact. And but you can definitely check that out. And what it does, it gives future insight into the monetary policy. So, when the CPI, moves higher than 1% from the target rate of 2, then the governor is required to write an open letter to the chancellor and explain what's being done to address the situation. So, and again, if it moves more than 1%. So anytime this happens, they have to write the letter. So they're going to have to write the letter and put that out there and what they're going to do to address, inflation. And then if we go over a little bit further, we don't really have anything going on in the U.S. We're going to the federal budget balance report. I expected that to have an impact, but it really didn't have an impact last time at all. So that comes out at 2 o'clock tomorrow here in the U.S. And again, I wouldn't expect that to have just a massive impact. And that comes out from the Department of the Treasury's website. So you could be aware of that one, but I wouldn't necessarily trade right off of it. fms.treasury.gov or treas.gov. And you can find the monthly report there. And if you're a New Zealand dollar trader, then core retail sales is going to be coming out of the New Zealand dollar there, and you can check that one out. The New Zealand dollar, again, that report comes out at 4:45 p.m. Eastern Time, and the expectation is 0.6%. So if it comes in lower, then the New Zealand dollar should drop. If it comes in higher, then the New Zealand dollar should rise. And so we'll basically just be watching that to see how that comes out if you trade that. But that is sort of an easy afternoon trade you can take advantage of. When we come on back, we'll go ahead and look at the rest of the week and lay that out. And I'll have an announcement for you as well that you might want to hear about. So stay right here. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour here with Darrell Martin. We're going through and we're looking at the fundamentals of the week, just to let you know when trading opportunities may present themselves. And we just knocked out Tuesday. We're hopping on over to Wednesday. There is one other thing that's going on here. China is going to have a big report that sort of comes out, and they will release it over a period of several days. And it's called the Foreign Direct Investments, and it's the change in the total spending on domestic capital investments by foreign companies. And there's not really a definite release time. Basically, it's just going to come out, sometime. But it's another big market mover. And so you'll just want to keep out when, we hear about this report that comes out. You're definitely going to want to know about it. So let me see if I can pull that up for you. And there we go. So english.mofcom.gov.cn. And that's where you can find the reports, the statistic reports that get released. And so when you see this foreign direct investment report, if you see it pop across the news somewhere, at least you know what it is. And it can have, like I said, a definite impact on the markets. And so you'll want to, there's not an exact time it comes out. You can even look on here, 12 o'clock, 3 o'clock, 10 a.m., 2 p.m. So there's not an exact time it comes out, but or even the exact date. It's just a range of dates. So real helpful from China there. But just one of those things you are going to want to be aware of. And again, that's just going to show the strength or weakness of the economy in China, which will give confidence or lack thereof to the markets as a whole. Let's see here. There'll be another report. Let's go ahead and hop on over and check out Wednesday. So Wednesday morning, over with the pound, we're going to have, let's see, the claimant count change. And that's the change in the number of people claiming unemployment. So basically, it's like their unemployment claims. Okay? It is their unemployment claims for the previous month. And that's going to come out of Britain. And you can get that report right there. That'll come out at 4:30 Eastern time. And so that's definitely a good pound-dollar possible trade for you, especially if it's way off of expectations. It's been off expectations a lot lately. We've seen some pretty good moves off that report. And again, that's 4:30 a.m. and ons.gov.uk. And let's see here. Then they'll also be releasing their unemployment rate at the exact same time. And so you'll probably want to be checking out that as well. And let's see here. I'll put both of those links over in the den for you. And let's see here. Get both of them in. Okay, well, I guess they're both going to end up on the same page. So let's see here. What else do we got going on? We'll move a little further. We're going to have the Zoo Economic Report for Switzerland. So that could move the Switzerland, the franc dollar, or dollar franc there. But not a major report. So not as big as like the German one, because it accounts for so much of the Eurozone GDP there. So not as big of a deal. Over at 5:30, some more British news coming out. The Bank of England governor is going to come out and speak. His name is Governor King. He is not the king, but his name is Governor Mervyn King. And he's going to hold a press conference along with other MPC members about the inflation report that is coming out that came out of London. And so he'll be answering questions on that. And so that's a definite market-moving event that you could definitely check out for doing a straddle on the pound dollar. So you could have one at 4:30, close it out, and get ready for another one at 5:30. And that Bank of England inflation report, again, is coming out at the same time. And that comes out again over bankofengland.co.uk. And let's see what else we got going on. So to sort of lining up the trades here. So we got 5:30 there for Britain. We also have 4:30 for Britain. And core retail sales in the United States. So finally we get some reports here in the U.S. Core retail sales in the U.S. here, 8:30 a.m. Eastern Time. And let's see here. You can get that report over on the Census website, census.gov/retail. And that report, again, is going to come out on Wednesday at 8:30. And that basically is a report of the total value of sales at the retail level, excluding automobiles. Okay, so that's core retail sales. Now, at the same time, retail sales will be coming out, and it'll come out on the exact same page there, so census.gov/retail. And so one includes, one doesn't include automobile sales. We'll be looking at both numbers, and both of them are high-impact numbers. So if they're both negative, then that's going to drive down the market. If they're both positive, drive up the market. Because basically everybody's looking for signs of a positive economy. Like they're really focusing in to see is there good news coming out or not. And looking on over at, we got the PPI report coming on out. And let's see here. So you can get that from the Bureau of Labor Statistics, BLS.gov. Just click on the economic releases, news releases. And you'll be able to see the PPI reports when they're released out right there. And let's see here. The expectation on the PPI report is that's going to come in at 0.2. Which would actually be a lot lower than the previous expectations have been, like 0.8, 1.1, you know. So if that number comes in, even at expectations, that's not really, you know, a better number. But it's the change in the price of finished goods and services sold by producers. So is the market inflating? Is it growing? Or is it deflating? Is it shrinking? And that's often reflected in just the value of goods. So that PPI number is coming out. And let's see here. See, that PPI report, by the way, is like the finished goods. So again, that's things sold to retailers, not wholesalers. Okay? And then we go a little bit later in the day. We're going to have a big announcement at 2 o'clock. FOMC meeting minutes are going to be released. So based on their latest, release, now, of course, there's no big expectations or changes that we expect to come out of that report at this moment, unless we see the market, dramatically sell off between now and then. Really, even then, we shouldn't see any kind of big major change. And that's going to be over on the Federal Reserve's website. And you'll be able to see it under monetary policy. And if you click on that over there, and again, that's federalreserve.gov. And basically, it's just the meeting minutes from their last meeting. So what went into why we're not changing the interest rate, why we're not changing the QE3 and increasing it or decreasing it, or is there any hints in there as to how long? This is what they're going to look for. Is there any hints to how long they're going to do QE3? Or is just nothing there? So if there's any surprises or any telling details that people don't know, that's why that would actually move the market. If there's not any big details on that, then it should be a non-event. But either way, 2 o'clock on Wednesday. So that can, you can basically, pick your currency. You can look at gold. You could look at like euro dollar. You could also look at any of the major indices for an impact. Also, oil could be impacted easily because, dollar obviously has a big impact on oil. So, gold, oil, silver. And on Nadex, I like, oil's probably one of the better ones to trade. Gold's great to trade. Silver's pretty good to trade too if you're doing the binaries. All of them are good on the, all of them are good on the binaries, but probably gold or oil or the S&P 500, maybe the Dow over on the spreads over on Nadex. And let's see here. Let's check out, see what else we have. We just got a couple more days left in the week to go through here. We got our retail sales coming out of Britain on Thursday, and they're expecting a negative 0.1%. So that's actually going to be worse than the last report. So if it meets that expectation, that's still a bad thing, okay, because it's worse than it was. If it exceeds the expectation, it'll be a good thing, but how much does it exceed it by? And so there'll be, that's your 4:30 trade on the pound dollar there, Eastern Time, and ons.gov.uk is, again, where all those reports that you can find, those are coming out. And looking on over a little bit further, we got the core CPI coming out of the United States. And that's, the change of, goods sold here in the U.S. So, and now this excludes food and energy. So basically it's the inflation report, but doesn't include, gas being $4 and $5 a gallon, doesn't include meat doubling in price, doesn't include corn going through the roof, doesn't include the things you buy every day, the things that you need to survive. Very convenient, but the Fed says, hey, it's not our job to control those things because they're too affected by market, situations and weather. We're just here to affect, long-term things like houses and all that. That's their excuse anyway. So, anyways, that number is going to come out. That's BLS.gov news releases, and you can hop on over to that website to find that one on Wednesday. And we definitely are recording this, so you can check out the archive later and pull it up throughout the week. Over on unemployment claims. Unemployment claims are going to be coming out here Thursday. Obviously, that's going to be a big thing. Now that the elections are over, everybody's going to be watching that to see if it comes in better or worse than expected. It hasn't had just a massive impact. The really big impact you're going to see is if it's massively different than expected. So, especially, it's almost more if it's worse than expected is going to be the bigger impact on that. And that'll come up on the Department of Labor's website as well, so DOL.gov. I know we're giving a whole lot of websites out here today, but just trying to lay out a trading plan for the week for you. And again, that's 8:30 along with the CPI. So be aware that those two reports are coming out at the same time, and so one could mute the other. All right, one's positive, one's negative. If they're both negative or both positive, then that can give a lot of strength or weakness to the market. And then a little bit later in the day on Thursday, we got the Philly Fed Manufacturing Index. And so that comes out by the, obviously, Philadelphia Federal Reserve, so Philly Fed, right? And they survey a bunch of manufacturers, and they look at, how are they thinking their sentiment about market economic conditions. And I would be surprised if that was positive, just depending upon exactly when they did the report. But if they actually did the surveys after the elections, probably a little more negative outlook, just because, all the gridlock and everything else that's out there. So not so much a bias one way or the other, just the mere fact that, people are concerned about is Congress going to solve this problem or not. And that is on the Philly Fed's website. You can Google it or you can go to phil.frb.org. So phil.frb.org. And so that will be a market moving event at 10 a.m. on Thursday. And then on Thursday, we have one other thing. Binaries is going to have a little speech. And he's going to talk about housing and mortgage markets at the Hope Global Financial Dignity Summit in Atlanta. So obviously, housing market is huge. And I expect he'll have some positive things to say about it coming back. So that could probably give the market a little boost about that time of day. And again, that comes in at 1:20 on Thursday. And you got to know when these events happen. When I talk about diagnostic trading, I go into fundamentals, I go into seasonals, I go into technicals, we go into all those different things. The reason fundamentals are so important is because no matter what your charts say, okay, no matter what your trading system says, no matter what, okay, at the end of the day, when a report comes out, it takes precedent. Now, it only takes precedent for about 15 minutes, and then the market, that's when your charts take over and everything goes back, to trading as normal. But, and I've said this time and time again, but just want to remind you, that when a report comes out, okay, that is like a bus going down the street. And no matter how good of a checkup you got in at the doctor, okay, no matter how much they cleared your bill of health, no matter how perfect everything seems, if you don't look both ways before you cross the street, okay, you get hit. And so you got to know when those fundamentals are coming out and which ones are the high impact events. And that's why I'm so big about going through those. Also, the great thing about them is you know when they're happening. And as a trader, diagnostic trading is all about going, okay, where are the orders going to be placed, and how can I take advantage of them? How do I think like a fundamental, a seasonal, a technical, a statistical trader? And when all those line up, it works out great. But one of the cool things about fundamental trading is you're going to go, I know when an event is going to happen. I know whether or not it's a high impact event. Well, if you know exactly when the market is going to move, but you don't know which direction it's going to move, then you at least have the ability to now either 1, protect your account, or 2, place a trade, and 3, limit your risk by using something like Nadex for, buying or selling spreads or binaries. And you want to combine fundamental trading, and this is very important, combine it with statistical moves, or not really standard deviations because they're based on past movement, but what I call, diagnostic deviations or implied deviations based on future movement. And if you'd like to get access to our deviation levels, I actually post these every night, and you can go in and get them, and they're based on the underlying market's expected movement, the implied expected volatility movement. Okay, so they're not simply, a number based on some mathematical, historical, magical thing. It's if I take all the implied volatility numbers out of 4 months options, okay, I take, if I can get 4 months options, and up to 4 options out of each month around the at the money strikes there, put them all together, average them out, so I get the total market consensus. Then I'm actually able to go in and look at what the market expects. What does the market think? And how far does the market think the market's going to move? Because you know what? The market's always right. Okay? So you want to listen to the market. And it's amazing how accurate these levels are. And you can go in and we post these, like I said, every night. You can get access to them if you go over to TFNN.com and just click on Diagnostic Trading right there, along with the box spread analyzer and all the tutorials on Nadex and the help desk where I answer all the questions you have. You also get access to the deviation levels. And so if I pull those up right here and you're inside the members area, you can click on today's deviation levels and you can see how far the market expectation moves were for each market. Well, why is that important? Well, let's say you're going to go in and you're going to do a news trade, okay? And you want to straddle, maybe a binary or a spread, something like that. Or maybe you're just trading futures or forks or ETFs. You need to have an expectation of how far is the market going to move. Where do you take profit? Okay? It's one thing to get your risk management under control, which you have to do that. Nadex easily helps you do that because all the products have defined risk. But now you have to master profit management. And that's what these deviation levels are about. They're about proper expectations, not the hope that it'll go to the moon, okay? But moving up stops based on an objective number that is in your face, not a interpretation of any kind of chart pattern. Chart patterns are great. They all have their place. I love them. I use them. I use fibs. I use technicals. I use all that. But it's one piece of trading. You got to add in statistics with it, okay? Just like you got to know fundamentals. You got to know when the reports are coming out. You got to, make sure the charts are lining up, but you also got to know proper expectations. And that's what this is about, proper expectation of movement. So if you haven't tried that out, hop on over right now to the TFNN website, sign up for that. You get a free 2-week trial, no risk at all, and you can get access to the deviation levels immediately. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And pardon me. Little announcement for you here. I'm going to be out at the Traders Expo in Las Vegas this week. And so come on out and join me. I'll be over at the Nadex booth and be giving presentations, trainings, answer all your questions that you have. And I meant to mention I was talking to William, but we just got into the markets, didn't get to mention it. But William in Las Vegas, you definitely got to come on out and see me. I'll be out there Wednesday, Thursday, and Friday. And and Saturday. So actually, it's 4 days. And live market hours, I'll be placing some trades, be doing some fun stuff. And definitely to come on out and check me out if you're in the Las Vegas area. Or if you want to come on out there, there's going to be a ton of great training. And it's a lot of fun. And, of course, what better place for a trading expo than Las Vegas? New York is probably the best expo, but Vegas is definitely the best location. So, sort of one of those, traders and Vegas. Should that be combined? I'm not quite sure. But no matter what, it is always a lot of fun. And so they asked me to come on out and speak out there, so I'll be out there and be happy to answer any of your questions and help you out with anything that I can. And let's go ahead and check out one of the things I was talking to you about before we went to commercial break there. Make sure you check out the diagnostic deviation letters, the box spread scanner. And I'm going to go in and I'll help you understand how box spreads work on Nadex. Use the deviation levels. They're great for spreads or for binaries. And put them all together again, 2 weeks, and you can try it all out. But the deviation levels, huge, very, very helpful in trading. And let's go ahead and pull up some of those right now and close out all these different news release websites here so we can see what we got. And Facebook is deciding to go somewhere today. So far, it has just ran up like crazy. There's some massive volume right there, and pushed through with some very, very strong volume. So we'll see if that continues to hold. So I bought some calls not too long ago there, and $20 calls. We'll see if they expire on the money, but hopefully it keeps on moving up for those. We'll see. And they were sort of a long shot trade. It's like, we'll see how it goes. But hopping on over and checking out the S&P. And we'll go in, and I like to, like I said, if I'm looking at intraday charts, I'm usually looking at 10-minute bars. And I've just found they give me the, a good balance of seeing trend and reducing choppiness on everything. And we have a high right now of 1381.75. Not even quite half a deviation up or down. As we talked about earlier in the show, markets overall pretty flat. And let's see, we had a move down on the Russell down to 789.8. And 789 was half a deviation. So we're just getting really tight trading ranges today. Looking over on NASDAQ, we're going to see the same thing, I'm sure. We got a low right there at 25.72. And, that's still not even quite half a deviation. Very, very rare, very quiet day. But why is it a quiet day? Did we expect it to be a quiet day? Yes. Why did we expect it to be a quiet day on the equity markets as a whole? Because the banks are closed. Okay? So, you can talk about whatever you want, but at the end of the day, when banks are closed, things are quiet. Looking on over at copper. Copper did make a high on up to 3.469, and which is an exact to the tick half deviation mark, which means that you're tightening your stops as soon as it hits it. Again, that's copper right there. And again, 3.469 right there. And let's see here. Look on over. Let's check out our other metals, what we got going on. We got gold. Gold moved on down. Right now we got a low today of 1725.2. And that is not even quite half a deviation. So gold being pretty quiet. And silver, we gotta see things pick up tomorrow and definitely on Wednesday. But silver right here, it looks like it had a low so far of 32.17. And on silver, 32.17, almost one deviation. So anyways, if you want to check those out, hop on over to TFNN.com. If you have any questions, feel free to give me a call. I will see you tomorrow on the show, and make sure to check me out in Vegas when I'm at the Money Show. I'd be glad to meet you.